the first one covering fintech, before deciding to go out on my own and become a founder, which was not part of the plan right away, but ended up falling into this, and something that I felt like if I didn't do now, I would never do. So here we are. I'll let each panelist introduce themselves as well. Let's just do Wendy first, Kelly second, Clarissa third.
Great. Well, it's an honor to be here, and we're almost at the end of the week. So my name is Wendy Kiley. I'm the founder and CEO of Piermont Bank. We are physically headquartered in New York City, and we are a fully chartered FDIC insured bank, and that can operate across the country. And this is my 26th year in financial services, in banking. So I have gone through from very large money center banks to obviously starting a bank from scratch. So looking forward to spending some time with everybody today.
Hi, everyone. I'm Kelly Eiffel. I'm the founder and CEO of Guava. We're a digital bank for Black-owned small businesses, and we're launching in August. Wendy has a few years ahead of me in fintech, but before starting Guava, I worked in venture capital.
I'm Clarissa Horowitz. I'm the Vice President of Marketing at Treasury Prime. And although I'm not a founder, I'm thrilled to be sitting here with three founders, two of whom are our customers, Piermont Bank and Guava.
Amazing. I want to start off with a question that I ask myself a lot as well is, what made you decide to finally take the leap and become a founder? Because this is my third panel of the day that I've done on different things. Apparently everyone decided to do a lot of panels on April 22nd. But something that came up is you can get pretty comfy in just the corporate job. Like, life isn't so bad. You kind of know what to expect. You go in 9 to 5, do what you need to do. And when you become a founder, that things are uncomfortable more than they're comfortable. So I'll let Kelly do this first, and then we can kind of go around from there.
Yeah, it's a question I think about a lot lately. But for me, it really was kind of the social problem that Guava is trying to solve. I have been passionate in talking about the racial wealth gap for years. And late last year, decided that I wanted to focus all of my time on doing something that could potentially solve that problem. And so that's kind of how I decided to take that plunge, because nothing else was doing it, essentially.
Yeah, I think that's a lot of the reasons that I decided to help co-found Fintech Today too, is like, there's not a place for people to go to learn about what's going on in fintech. There's a few like smaller ones that kind of wade in here and there, but there's nothing for me to be like, okay, like, what are different companies doing? What's going on in this space? How is my data being used? Like, how does Square really work? All of that stuff. And you just have to be so passionate about it. That's like, you know what? I'm willing to be uncomfortable to make this thing work. Like, it needs to happen.
Exactly.
Wendy, what about your thoughts on this?
Sure. Very similar to Kelly and you, it's about addressing a market need, right? So we are built as the first hybrid bank trying to bridge the gap between fintech and traditional bank. So especially when it comes to small, mid-sized companies, that's just a segment that traditional banks have done a terrible job in servicing. So that's the market need. For me, taking the plunge, this is my second startup. So my first one was back in 1997, the first .com boom. So it was a long time ago. I raised $12 million from a few venture capital firms, and ended up selling the company back to one of my investors, and they combined it with another company and took it IPO on the Hong Kong market. So this is my second time around. So my career path has always been in building. Even working for larger institutions was building brand new markets, a whole new business segment, creating a brand new business that the firm did not have. So that's what I enjoy. So after all these years, and keep hearing people asking the question, well, there's got to be a better way. There's got to be a better way. Well, why don't we just actually try to solve those problems and find a better way? So that's how Piermont came about. So.
You touched on something that I want to dive into next, which is fundraising. I'd love for us to stick with you on answering this question and then go around to others as well. But how has the fundraising environment changed from back when you were doing your first startup to today?
A lot, but for me, it's a unique situation because capital raising for a fully insured charter bank is a bit different from a tech company, whether it's fintech, biotech, medical, doesn't matter. Because for us, there's certain sets of requirements, certain amount of maturity of the business model that you actually have to implement before you can go out there and actually raise money. So that was a little different. Having 26 years under my belt helped a lot. Had a very broad range and portfolio of clients who actually were eager to invest in Piermont. So it was a little bit different and it was a lot easier. With that said, we back a lot of fintechs in terms of providing that banking service. So I speak with a lot of founders of fintechs, and the challenge of raising capital is very real. So I've been on a few different panel discussions discussing when to raise money, when to use debt to finance, right, your operating needs. So we can get into a little bit down the conversation. But I think that the challenge is there, especially for female founders, especially for, honestly, the younger founders. I think that it's not even a trick. I think for me, the success was that really doing your research, right? Because otherwise, there are only so much time in the day that we have as founders because we are jack of all trades. I've always said, from buying trash cans to worrying about whether or not we have a whiteboard, to calling, future clients, securing talent. I mean, trying to figure out what the core system is. But at the same time, finding that time to do the homework ahead of time in terms of what exactly a particular investor is looking for. Now, you go on their website, they talk about their overall goals or mission or what they focus on, but making the extra phone calls, doing the extra research, really dig in and find what they're specifically focusing on will save a whole lot of time. So.
Kelly, how about you jump in here?
Yeah, I mean, similarly, I worked in venture, so I do think that my experience raising our pre-seed round definitely benefited from the relationships that I had before deciding to launch Guava. But I will say, I'm a Black woman, so I don't expect that to go very far. I think we all know and have read the stats on what fundraising looks like for people like me, that, less than 1% of venture capital dollars are flowing to Black female entrepreneurs. And so I think while I definitely benefited from the relationships that I had in venture, I'm sure that a white guy who had worked in venture probably would have been raising more, who would have raised more than I did relatively quickly. And I will say that, I'll stop there, actually.
We got time to dive into that further still. Clarissa, I know you're not a founder, but what thoughts do you have on this? Because Treasury Prime is a startup. I'm sure as a VP of marketing, you've worked with a lot of other startups. You mentioned that, you have a lot of clients that are startups in the space.
So if we're talking specifically around fundraising, I think Wendy put it very well, which is trying to figure out what is the correct timing of things and when you should be going out. And right now, if you're looking to raise money for a fintech, this is a really good time. There's an explosion of interest. And I think that, we've all seen rounds with multiples that make us scratch our heads a little, but I think overall that says a lot about the interest in the category. And it's funny because when I joined Treasury Prime, it was like, oh, like I totally get what we're doing. We are sitting between banks and making it easier for fintechs to integrate directly into banking systems and bring brand new offerings to market and coming up with products that didn't exist and reaching communities that were very underserved. And then what happened within 4 months, everything changed and this category just sort of, got lit on fire, which is, I think, really exciting for all of us. And to see the kind of explosion of creativity in the fintech space and the companies that are getting funding and banks like Guava that are targeting these, specific communities. I think it's just fascinating. It's a great time to be in the sector.
Wendy, I'll go back to you on this one just because Kelly and I are both, more towards that pre-seed side. But as you get bigger, you can think more about who exactly you're raising from. Is it a
Right.
VC firm? Is it a corporate VC? Is it private equity? Like there's so many different options out there, a large angel investor. How do you think about that going, into those further rounds?
Yeah. So for Paramount, we raised 10 million pre even application, sending in application to the regulators. We opened a bank I should say, as of today, we are about $50 million capital. And we are about to go raise another $60 million. And I can tell you that we haven't even gone to market yet, and we have people calling us. And that's very unusual for a charter bank because, charter bank, there's balance sheet risk, and usually not all, you have a very particular pool of investors that will be interested. So we're getting calls from private equity firms who typically only invest in tech companies. So that's very interesting because I think that everyone is start seeing that convergence of tech and traditional bank, right? It's whoever can do that the best. So I think to Clarissa's point earlier, timing is everything. So in terms of where you are at compared to the overall marketplace. So I've always said to everybody that whether it's getting raising capital or getting debt financing, timing in terms of being able to articulate exactly where you're at, what your growth projection is, and deep down identify or figure out what is aspirational, what can you really put forward, what can you really achieve? Because if you don't meet that, if let's say that you got investor on board during the early rounds and they realize that you are really just all aspirational goals and can't really execute, it's very hard for them to step back in. So at this point, for Paramount, for example, is I'm looking for more truly strategic investors. So investors so we have institutional investors that can be there for my next event. Our next event is IPO event, right? So it's important that at different stage, you stack your investors who can, at least part of them who can be there for your next round, right? So you always have that so-called anchor already in there for each round. You obviously don't have that for the very first round. So for our first 10 million, I had 3-4 that I knew that they were committed to keep their percentage all the way up to 100 million in total capital stack. So that was really important. So when I raised the next 30 million, right away, I already said, I got 4 people already committed. So that's really critical that you always at least have one in there that can be there for you.
Kelly, I'd love your thoughts here first, because something that is super important to me, especially just given the recent events and being a female founder, is diversity on not only the board but like an advisor or investor level. Even I want to make sure I'm not taking just money from white male VCs, right? Like it's fine if I have a few in there because I have lots of good friends that are white male VCs that would love to be in the round and support me, but I want to make sure it's not just coming from them because I want to make sure I'm getting good ideas, good diversity, and just setting a good example for my company.
Yeah, I mean, I think you just said it so beautifully that, whatever goal we're trying to accomplish, it's not going to just be one person or one experience that's going to get us there, that there needs to be a coalition of like-minded folks that are pushing the ball forward. And I think that is how I approached fundraising. That's how I'm approaching building my team. And thinking about who we're serving, that like, while I am focused on Black-owned small businesses because they have been historically underserved in the market, and I think there's a real opportunity there to serve them and create products that are specifically focused on their needs. My team is going to be, like I said, a diverse coalition of folks that are mission aligned, so that we can have those perspectives that will, challenge some of the preconceived notions that maybe I have about our customer base or the way that we're, going to market with our products. And so I think, when we talk about diversity, it's not just like demographic, it's not just having Black and brown people in the room, but it really is, kind of I keep saying the word coalition, it's just like stuck in my head. But when someone said to me this morning that when you look at the protests last summer after George Floyd was killed, that it wasn't just Black folks in the streets, that it was everybody. You know, you can see all of America represented in those protests. And that was really what got the attention and kind of moved the message forward. And I think that that's kind of in no small part how I'm thinking about building diversity into the fabric of Guava.
What have been some of the challenges that you've come across in terms of making sure that it's diverse? Because I think for me, I alluded to this before, is that I have a lot of white male friends and I didn't want to just have them in the round. So that was a challenge to me. I had to really think about like, okay, like what other women, what other people of color can I get in here that are going to be valuable to me and valuable to the diversity that I'm seeking on my team?
Yeah, I was pretty intentional about what my cap table looked like. I knew that I wanted to carve out half of my cap table for underrepresented investors, and that's what I did. And so when there were white men that wanted to participate, I did, say no or hold off until I could get people that were underrepresented or ask them to bring a friend. I think, being really honest about how I'm building my investor base, being really honest about how I'm building the advisors I have around the table was really important to me, and being as candid as possible with them. And most times they were on board for it. So it's like, all right, well, I can't get in now. I'll get in later. Or I'll bring a friend that is going to invest alongside with me. Made it really easy. There was no pushback when I came to the table and was, really open about why I'm doing what I'm doing.
Before I go to Clarissa on a question on diversity, do you think that the pushback would have been harder a year or two ago?
Oh, for sure. I think even talking about Guava and who I'm focused on, Black small business owners would have been much harder in 2019, 2017. We all know about the racial wealth gap now, and we can talk about it. Most of us intelligently, or at least have the data points that we can reference. But that was not the case 2 years ago.
Yes, Julie, if I may just add, so for Paramount, for example, we are a MDI, so it's called Minority Depository Institution. It's designated by the FDIC. And to qualify for that, essentially it's measured by the composition of your board and your shareholder, meaning that has to be minority majority. So, and for us, it's so interesting because as I'm going to market to raise the next round, my existing shareholders and board members are emphasizing that we must maintain our MDI status. So they're the one who's championing this. And there are so many more investors who has that ESG box to check, right? Environment, social, and governance. It is actually, it allows us to actually an easier path to reach our fundraising goal, because all the funds now have, when I say all, there's quite a bit, because my investment bankers just send over a list of their outreach, right? The ones that they're going to call. I would say 75% of that list, there were 165 firms on the list that all had a ESG box to check. So I think it's very favorable to folks like Kelly and myself right now to be in the marketplace and raise that capital. So Julie, if you're looking to put a board together that has a minority majority composition, and it's going to be helpful, not only that we believe in it, we see the value to institutional value that it creates, but it's the right thing to do, and it helps us raise additional capital.
Right. No, that's a really good point. So not on the fundraising level for Clarissa, but just building out a marketing team at Treasury Prime. How do you take diversity into account? Because I'm sure, as a startup, I feel like it's always been semi-important, but I'm sure you guys have taken an even closer look at it over the past 12 to 16 months.
Yeah, and I would actually say as a company, without having, I joined as person number 14, so it's not like we've had any diversity initiatives in place, but it's a company where just our DNA is we value these differences. And we recognize these differences in a couple of ways, because they're sort of the obvious ones, which are gender and race and ethnicity. But then there are other ones around background. So it's like, do you hire an engineer who maybe hasn't gone to the schools that everybody else has, or who maybe picked up coding skills doing a program on their own? So there are a lot of ways to look at diversity. But one story I wanted to share, because Kelly, I love the way you spoke about the intentionality of how you were putting together your board. Is a few years ago, I read Emily Chang's book, Rotopia, and I had to read it in small amounts because it made me very, very mad. And I thought, okay, I'm working in a big enterprise software company right now. We are, women are absolutely a minority. That's just the nature of the industry at this point. What can I do in my role to try to change this a little bit? And I was in charge of the user conference. And so that was a lot of speakers from within the company. And so I brought the group together that worked on content. And I said, I think we should set a goal for ourselves of having a target percentage of female speakers, because I looked back at what we've done in the past and it's been terrible. And everyone in the room was immediately on board. And what was so interesting is as we started talking about, okay, who do we put on stage for different sessions? Finally, the names that we were throwing out there were totally different than the names we had been saying in previous years. And I think that was really eye-opening for me, which is these things don't just happen on their own. You have to be very aware of this to make these changes.
Yeah, and I think for all of us, it it's still not easy to pitch all this as it should be, as easy as it should be, I should say. But I'm so glad that we've had these conversations over the past 6, 12, 18 months where now, like, you almost don't even have to have the conversation because everybody's thinking about it and thinking that it's a good idea and paying attention to it in regard to who they're hiring for their team, who they're inviting on their cap table, who they're raising money from. I think I'm glad there's at least something good that's coming out of everything that's going on, essentially. Um, so something else I wanted to talk to you guys about we'll do Wendy first here. As your company grew, how did you account for, you're continuing to accelerate. How do you decide when is the right time to go out and raise money? Do you wait for something to have enough traction? Do you simply have the idea and say, hey guys, I have this idea, come back me for it? Like, I think there's so many questions around fundraising in terms of not only when you fundraise, but how much you should fundraise too. It's complicated.
It is. Again, in Piermont situation, it's a little different because we have regulatory requirements in terms of the amount of capital that's needed to open a charter bank. Our ability to lend money, meaning how much we can lend per customer, is driven by total capital. So it's a percentage of that. It's a 15% of your total capital per loan. So that drove so it was sort of a reverse engineering process for me, is that if this is the target demographic of type of commercial business that Piermont would like to support, what is the range of typical loan sizes that they're looking for? Then I need to make sure that I raise enough capital that allows me to provide that type of loan size. So it's a little different for a non-regulator institution. But overall, aside from that, for me, it's about why do I need the capital? What do I need it for, right? So for me, going out there right now is growth capital, because we essentially we raised enough money for 3 years when we opened the bank. But now we have essentially exceeded our growth projection. So I'm out there trying to get ahead of the game and raise money so that I have enough capital for the next 3 years. So different stage is for different purpose, right? I started off, it's the necessity, is that I need X amount of capital to get, to open an office, to hire X number of people, to have the core infrastructure put in, to purchase the appropriate technology. The next phase was meeting the regulatory requirement to open the bank. For me now, it's growth capital, right? And which puts me in a different position when I negotiate the term sheets in terms of valuation and everything else. So it's, yeah.
Kelly, what about you here?
Yeah, I think similarly, it was the necessity. It was a pre-seed round. So it was like, how do I, get an engineer on board? How do we activate against a strategy to, make an MVP and, test it, acquire our first users, our first members. And so that was kind of the decision for me. But it took a while. It took a lot of me working on Guava nights and weekends before I felt like I had enough to go out with a deck and talk to investors about this thing that I was trying to build. But it was definitely kind of working backwards from what I wanted to accomplish in the next 12 to 18 months, trying to do some of that bootstrapping to prove out the interest and the need for it, and then going to investors.
Clarissa, I'll come back to you. How do you think about partnerships that guys can do, both on the marketing side as well as any other areas of the business that you would work on that with?
Sure. So with partnerships, there are different sorts, right? So I think this is not a particularly, you know, illuminating answer, but it's the do we build, do we partner, do we buy model. And so right now it's finding fantastic partners. There's a company called Unit 21 that's doing some wonderful stuff, and we like them a lot. And Wendy, we're bringing them to you, as you know.
Yep,
I
that's
think
right.
when it comes to partners, it's really who meets our bar for good technology, who is honestly reasonable to work with, because some companies are easier than others, and who kind of shares our values in the sense of we are trying to make great technology that is easy for developers to use. And do we have a partner that is as committed to that so that it can be this fantastic experience, whether that's with a bank or with a fintech? And so we really want to make sure that we're delivering something that feels great for people.
Wendy, I'll let you add in here.
So for us, the partnership, so we actually spend a lot of time identifying a technology partner like Treasury Prime to go to market. Because for banks, we have, we can develop our own capability to do direct integration to bring on board, let's say Kelly's bank, but it's easier to do it via a good technology partner. We also partner with MasterCard. It's not just a sponsorship of the BIN, right? So we work with MasterCard to go to market to reach our target audience. Actually, our head of marketing had joined this call, this panel, not the panel, but this call. And when he was here, she would tell you that she spends a lot of time partnering with associations that has the membership of our target, the bank's target audience, right? So partnership is critical in getting things done.
Kelly, how are you thinking about this in building out Guava?
Yeah, I mean, I think when we talk about partnerships, I'm thinking about how do I create a suite of partners that will best serve our customers again. And so whether that is like having tax partners or having folks that can help small businesses think about cash flow, that's really how I'm thinking about the ways that we can, again, offer the best product to serve the customers that we're targeting.
What have been some of the challenges in finding good partners for you at such an early stage?
Yeah, I think it's the stage. It's that, we are still we're launching an MVP or a beta in Q3, and it's folks are skeptical always of new products in the market. And I also think that, going back to this diversity question, that we are, targeting a niche that has been underserved and undervalued oftentimes in financial services and in the market in general. So it's really having to resell and repitch that these entrepreneurs and these customers are ones that they should also be focused on and that are of high value.
Julie, if I may just add one more point, this is even outside of the fintech ecosystem. As a bank, throughout the pandemic especially, we've been talking a lot about, right-sizing your partner, right-sizing your vendor. It's really important. Because when the PPP happened, for example, even though that's not our specialty, but we end up trying to step in and help out because customers who's been longtime customers of the larger banks, they weren't getting their help. So why do you want a bank with a bank that when push come to shove, they're not there for you, right? So just like when you look for accountant, you don't go get KPMG or Deloitte when you are 5 employees, correct? So you should right size all your partners, your vendors, however you want to describe them, because find your partner that who knows what you're doing, who knows your industry, who knows the pain points that you're facing at this stage of your company. That is really important. And when you find just partners that, that's not their focus, you don't want to be their biggest client, you don't want it to be their smallest client either, right? Same thing in partnership.
Right. So I'm going to pose a statement to, in particular, the two founders on here. It's never been easier to start a fintech company, but it's never been harder to make one work. Wendy, I'll let you take that first. What are your thoughts on that?
I had a 4-hour meeting this morning with our investment bankers and accounts and everything. And, this topic actually was framed a little differently, came up. For Paramount, for the bank, is two things. The challenge is, how do you keep pace with technology? And what is the relevant technology? And when do you offer what to your client, right? So for example, we're working with Guava. So what does Kelly need given her target audience? And being able to create the capacity to do that for each one of our fintech partners, that's a challenge. I think the biggest is about people. I think that doesn't matter whether fintech or not, what type of business industry you're in, it's always people, people, people. Every business is a people business first, right? I was taught that banking is a risk management business. I was like, well, people first, then risk management. And that's part of risk management. So when do you hire what talent? Because in a very high growth environment, I think, Julie, you used the word accelerating company, right? Is that the institution outgrows the talent pool that much faster. In a very established institution, you grow 10, 15% a year so that your talent base is very sustainable. So when institution outgrows the talent, what do you do with them? Do you reposition them? Do you exit them? But they were there, they fought for you, right? So you won't have today, unless you had all of these guys who fought the initial phase and established the core, you don't want to exit them. That is a big challenge. So it's a different way of answering your question, but I think that's probably what everybody is interested in hearing anyway, is that, what keeps me up at night, right? So.
No, it's such a good point. If you're growing fast, then it's really hard to make sure you have enough engineers, enough salespeople, enough on your marketing team. You just can't keep up.
Yeah.
Kelly, I'll let you jump in. You unmuted yourself.
Yeah. I'm thinking about this a little bit differently and definitely thinking about, like, how do I keep up? How do I continue to hire engineers? Right now is the question. But also, when we talk about it's being easier now more than ever to start a fintech, means that there are just more fintechs. They're like as a neobank for everything. And it's really, for me, differentiating myself in the market and making sure that I am really hyper specific about the customers that I'm serving, and being constantly thinking about, is this good for them? Is this what they need? Am I talking to them enough? Because there are so many options for you. If you want to download a banking app today, you could have like 3 pages of banking apps. And so I want to make sure that Guava is absolutely differentiated in the market, and that we're serving the needs of our core customers at every turn, which is true for every business, obviously. But I think it's, even more so when you have such a fragmented space and new entrants into that space every day.
Yeah, Clarissa, talk about a little bit how you have encountered this, just recruiting for other employees at Treasury Prime, as well as going out and finding partnerships. Because I'm sure that, if there are other fintechs out there, there's going to be other sales teams that are trying to make sure that they are the one that people pick versus Treasury Prime or something else.
Yeah, I mean, nobody wants to be in a market where there's no competition, because that means there's not much of a market. And I think that the flip side of the explosion of fintechs is the explosion of competition for everyone across the board. And so I think that, one of the things that I think a lot about in terms of marketing is, where do we spend how much and when? And that extends into hiring as well. And it's sort of this, how much do we invest ahead of our business on the marketing side? And what is the risk if we don't move quickly enough in terms of what we're doing and what our hiring is, that we're going to end up losing that market position? So I think it's this constant tension between, your revenue goals, what you want to spend, and how far ahead you think you're comfortable investing. And that's a conversation that I have with our CEO a lot. And this is a conversation that we're having across the company, because you may have a right answer for a period of time, and then something changes. A competitor makes a move, a big bank makes a move, and you need to be able to readjust. And if you lock yourself into, no, this is my annual plan, there's a very great risk, I think, of not making the correct decision in terms of changes in the market.
Yeah, we have a question from the audience as well. So it says, I think this is geared towards both Wendy and Kelly. Can you speak further on what has made a successful bank fintech partnership? And are there any trends with your partners as of late? Clarissa can jump in on this one too.
Yeah. I'll go first. So, banking is a service, right, Bess? Everyone, very popular. Everybody's talking about it. And I think that's what we're talking about. The question is what we're seeing is that we're trying to get to BaaS 2.0 now, for the lack of a better way to describe it, right? That the more successful partnership is where fintech has direct relationship with the bank, because at the end of the day, the product, right, that's being offered is driven by whether or not the bank is willing to power that, because we, right, as a regulator entity. So if a bank and fintech have that direct communication, direct partnership, and a bank who is willing to modify their products for the fintech's specific audience, that I think is very fundamental to a sustainable, right, successful partnership. I think you're going to see more and more from a trend standpoint shifting that way than just partnering through an API where the bank stays completely anonymous. And this is where, not to, market put a plug in for Treasury Prime. That's where Treasury Prime is very different. They look at this as a true partnership where it's a three-way communication so that it's benefiting the fintech the most, right? So if there's a client issue, right, when Kelly's customer, when they have a problem with their account, at the end of the day, that resolution needs to go back to the bank. So why do you need to go through another player to get to the final resolution? You want to be able to have that direct communication so you can quickly resolve the issue, right? So I think that's really one of the big trends that we're seeing is that direct partnership.
I mean, plus one to that, I mean, being on, the third wheel, the third leg of that stool, with that kind of that communication has really been helpful for us in the team as we're getting to market and being able to have, a direct point of contact with Paramount, to ask questions and to get smart on certain things, whether it's compliance or just like operational, has been extremely helpful and has kind of, leveled the learning curve for us quite a bit.
Yeah.
Yeah.
And there's value to all, sorry. I was just going to say there's value to all three parties. It doesn't mean that the technology partner is less valuable, right? So everybody focus on what they know how to do the best, right? Mm-hmm. We know banking products, we know credit risk, we know compliance. Let us do that, right? And Treasury Prime, in this case, focus on technology, making sure that the integration is smooth, it's fast, it's easy, right? So that's really, I think, making the entire relationship more efficient. Sorry, Clarissa.
Oh, not at all. I was just going to say, if you're bringing a fintech to market, if you're starting a company, which is hard enough as it is, and then you're doing it in a regulated space, I would want as many people on my team, on my side, helping me do this as I possibly could. And that means both technology and banking partners.
So one final question I want to pose to everybody, because I know we have about 4 minutes left. I'll let Kelly go first on this one. What do you wish Kelly, pre-starting a company, would have known then that she knows now?
That everyone's faking it that entrepreneur, I think, we all kind of look at entrepreneurs and say like, they know exactly what to do and how did they figure it out? And it's just, everyone knows like the one step ahead of what they're doing and figuring it all out. And being really confident in the decisions that they're making, even if they are often with limited information, they're the best decisions you're making at the time. So I think that's definitely what I would have told my old self of like, you're not going to know everything. Everyone around you doesn't know everything. And you just kind of have to make do and make the best decisions with the information you have at hand.
I love that. Wendy, what do you have to add?
I was laughing because I was going to say the same thing, is that, there's so much of very aspirational goal that's out there, right? But I think for me, I think I wish I would have known that the gap in terms of the talent pool that's available for someone like me who's building a different type of bank, meaning that we, as a regulated institution, where do I go search for talent, right? It's not going to be entirely from the fintech ecosystem, because you need that risk management, you need that banking, the traditional banking product knowledge. Then you go to the traditional banking pool. Well, you know what? They don't run as fast. They don't think as fast. Everything is slower. Everything is linear. So that talent gap was something that I wish I would have recognized earlier. Not sure if there was anything I could have done differently, but at least anticipate that challenge and the time that I need to really, from a recruiting standpoint.
Clarissa, I'll reframe it just a touch for you. What do you wish, pre-startup Clarissa would have known before joining a startup and making her way up the ranks to be one of, the executives over there?
I'm with Kelly. Everybody's faking it. You are operating in total ambiguity. And when you're really early in any company and you're a more senior person, you have to chart the course for your division, because nobody knows more about what you're doing than you do. And so you have to not only be comfortable just building from scratch, but you've also, and this is so critical, you have to bring everybody else along on that journey with you, and why you're doing things the way you are, what you think is going to happen, and making sure that they understand. Because for a founding engineer, what I'm doing over in marketing is not it, the reasons aren't obvious. And when you bring everybody along on that journey, then you're really bringing the company together.
Love ending on that note. Kelly, Wendy, Clarissa, thank you so much for joining us today. Thank you everyone in the audience for joining. There is all our social info if you want to go ahead and follow us on Twitter, LinkedIn. Otherwise, we should do this more often. This is the second all-female panel that I have led in the last 24 hours, and I love that.
Nice.
Thanks. Thank you, Julie.
Thank you guys. Have a good one.
Thank you.
Hi, thank you.
Bye.